Hey everybody, it is Greg Gossett from Gossett Trading and Mentoring, and today is Tuesday, July 16th, 2024. How you doing today? Wow, what a big day in the market for the Dow, huh? Incredible day, really. And I appreciate coming here. I hope you're going to learn something today in this podcast. And if you do, appreciate if you could give me a thumbs up right off the bat. Really helps out the channel. Today I had a nice long trade on Apple on the 5-minute intraday. And I trade and I teach the deep dip buy stock trading approach, one of the many trading approaches that I use. And this is a perfect example of using a close back above the 200-day moving average, which is the black line here. But more importantly, it's a good example of a higher low close back over the 200. If you watch these videos regularly, you always hear me talk about high. If you're long, if you're a bull, that a higher low entry tends to trend. A lower low entry tends to usually initially fail, and then the higher low is the one that trends. So Apple was down most of the day, and we got down in here to the 30 RSI level. So it was, quite oversold, and it moved up here and closed above the 200-day moving average, the black line. But you see how this came from a lower low, close back over the 200. Now, that's okay to take. It is okay to take, but we always want to increase our chances by being patient and waiting for a better setup. So I did not take this close over the 200-day because I just know from experience, especially in this context, that I didn't know, but I had a feeling, and I was right, that if I take it here above the 200, it's probably going to initially fail. And it did. It came right back. Now, the next bar is where I entered. Now, this is a close above the 200, but why is this a better close above the 200 than this? Because it had a higher low. This is a lower low, closed above, closed below, closed above. So we have a higher low, closed back above the 200. This low is higher than this low, isn't it? So whether it's a higher low V1, V2, you hear me talk about that a lot in the value zone, doesn't matter. Same thing for shorting. If you want to short, in my experience, I get better results if I short a lower high than a higher high. If I short a higher high, it usually comes down, gets bought, goes back up, and then if it's a lower high, that's the one that trends down. So it's the same to the long side. So we had a lower low, we closed back above the 200. I passed on the trade, went down, and then we closed back above the 200 again, but it came from a higher low. Make sense? So I did get long here, 233.54. Now, as soon as I get long, I always have two stops. The first stop is the emergency stop. That's always going to be the value of 2 ATRs below my entry. This is the red line here. Okay, and I usually wait until the bar closes to enter or exit my trades. But if the next bar had gone down right down to the 200, I simply would have just gotten out of the trade. That's it. I know how much I'm going to lose. It shouldn't go down there. It's 2 ATRs away. It's 2 standard deviations away from where I bought it. It should not go down there. But if it does, I just have to get out. That's just how it goes. The second stop is my end of bar stop. And usually the end of bar stop is, it reverses why I got into the trade at the first place. So why did I get into this trade at the first place? It was a close under, close over the 200-day moving average. And like I mentioned, it gets bonus points because it came from a higher low. This low was higher than here. Okay, so close above the 200, got in 233.54, placed my emergency stop 2 ATRs below, and then my end of day stop would simply have been a close back below the 200-day moving average. Only 5% of the time you're going to hit the 2 ATR stop. 95% of the time, if you have a loss, it's going to be because it closes below your end of bar stop, which is the 200. All right. Now, as far as profit goes, I'm risking a total of 2 ATRs on my entry. So I want to have an asymmetrical risk to reward ratio. In other words, I want to have at least twice what I'm ultimately risking for the profit target. So I take my entry price, I add 4 ATRs above. So this is the green line up here. Now, one of 4 things is going to happen when I put this trade on. 1, it's going to hit my emergency stop, worst case scenario. 2, it's going to close below my end of day or my end of bar stop, which is the 200 in this case. So either a 2-8 emergency stop, it's going to close under the 200. I'm going to hit my 4 ATR profit target, or it's going to end up somewhere in the middle. Maybe, it hasn't hit my profit target, hasn't hit my end of day stop, hasn't hit my emergency stop, so it ends up maybe somewhere in the middle as a small loss or possibly a small gain. And that's what happened today. You can see my 4 ATR profit target didn't quite get there. Here, I thought I had a chance, then it kind of came back, and I was like, But point is that it still was a nice trade. It still was 0.54% on the day trade, $1.27. And some nice profits for the day. But it's a very easy trade. Just higher low, close under, close over the 200. If I'm wrong, chances are I would have been wrong probably fairly small with the chance of having a 2 ATR loss. But I like the setup and didn't quite hit my profit target. You can see it moved up, but things were going well, but then it came back. See how it tested the 200, the black line twice? It went underneath it, but closed back above. That's what kept me in. If had it closed under, I would have got out. Second bar went under, but closed above. That helped me survive the trade, and from there, we took off. So I hope you find this helpful. Deep dip buy, a simple deep dip buy approach. If you'd like to learn more about the different approaches that I use 7 or 8 of them at this point. And if you'd like to learn more about how I use them, how I manage these trades, how I enter the trades, 3 options for you. First of all, I have a YouTube channel, or I have a weekend podcast called the Gossett Trading and Mentoring Weekend Review, where I review all of the trades that I took on my daily time frame, or the weekly time frame. We talk about when I got in, why I got in, what were the combinations, what were the confluences of signals, how did I place my stops, my emergency stop, my end of day stops, and how I am managing the trade going forward, either to the upside or the downside. And then I show you my results and so forth. And I think it'd be helpful. These videos are only about 10 minutes, but those are an hour or more. So I get into a lot more teaching details of the process that I use. And then I also talk about the coming week as far as different markets that I'm looking at and different levels that I'm looking at as well. So I think that will be helpful for you as well. Secondly, I do teach private one-on-one stock trading course in the evening time via Skype. It's a 15-hour course. I teach you step by step all the different trading approaches that I use, how I analyze the charts, how I look for confluences, combinations of signals. It's a great course. When you're done with it, you're gonna have a whole other skill set that you can use for trading. And it's gonna make you a better trader. I promise you. I've taught people from all over the world, from beginners up to the hedge fund level. And so if you're interested in that, my email is in the link of this YouTube video. Just send me an email and we could get the conversation started. But it's an investment, but I promise you it's worth every penny. And then as an alternative, number 3, if you'd like to learn more about the deep dip buy stock trading approach, which is the one that I showed you here, I have a really good online video at udemy.com. The link's in the description. It's a really great course. It's super affordable. I think it's somewhere between $30 and $40 these days. I sold so many of them around the world, and I think it has like 4.8 stars on the reviews. But I've had such good feedback on that. It's a really great, affordable way to start to learn a really good trading approach, which is the deep dip buy stock trading approach. So anyway, if you'd like to learn more, those are the 3 options. But I hope you did well today. I hope you have a good rest of your day. If you have any comments or questions, please leave them down below. I'll do my best to get back to you on that. But thanks again for your time. Appreciate you investing your time here, and have a great rest of your day. We'll talk to you later. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.